do you think right now, with all the macro uncertainty out there, what do you think is already priced into stocks, and what does that mean for the direction from here?
Well, clearly, I don't think a lot is priced into stocks. Kind of what Mike was saying. I mean, if we're 3 or 4% from the high, things are looking okay to the markets. I think I've been scratching my head for some time at the continuing weakening fundamentals that you can clearly see in the data, and the market's kind of sailed through all that data, and then we get one print of ISM, and the market really has this drastic reaction. So I think the market's short-term reaction function is a little bit erratic, in my sense, but I think what's clear in all the data, not just the ISM, is that the fundamentals are clearly getting weaker, and a lot of the faster-moving stuff, the more timely data, is continuing to point to things getting even weaker looking forward. And I think that's the biggest risk. And people, the bulls tend to point to the consumer holding up really strong, but literally every part of the economy is slowing. It's just a matter of how much. And so personal spending peaked a couple of quarters ago. Actually, really, personal spending peaked like last year, and government spending peaked last year. You're looking at all these things. It's not just the business cycle. Everything is slowing, and I think that's the biggest risk. Is you're not seeing many signs of a concrete rebound, and so really what you're seeing is a lot of hope out there. I think the next hope today, if you look at the Fed futures, they're pricing another Fed hike, 90% price.
Fed cut.
Yeah, the Fed cut. Sorry, I think that's maybe what's holding this up. But I think that hope is way overdone.
Tracie, do you agree with that, especially given some of the big moves we've seen to start off the month of October? Historically, this month does tend to be very volatile. Are you cautious right now, or do you see this as a buying opportunity?
Yes, you're right. October does tend to be very volatile. In fact, it is the most volatile month, followed by September and November. So the fall season does tend to be volatile historically, but there is a lot of data coming out right now that imply some weakening in the U.S. economy, particularly in manufacturing. We saw the manufacturing ISM number earlier this week, and then we got a weaker than expected service number. So really what we're watching here is we're watching the jobs data, because what's important and what's holding up the growth in the U.S. economy right now is the U.S. consumer. And should that consumer start to falter, then that's where we become more worried. And we'd be worried that this is more than a slowdown and potentially leading into some sort of recessionary environment. Not our base case, but something we're watching really closely.